If you still struggle to find your daily bias in the market, then this is going to be the video for you. In today's video, I'm going to be breaking down exactly how I find my daily bias every single time in the market by using 5 simple steps. Once you apply these 5 simple steps, you're going to be able to actually find your daily bias in the market every single time, increasing your win percentage, which is our overall goal in the general. So, how to find your daily bias in the market. All right, these are going to be 5 steps I'm going to be breaking down how I was able to catch over a 3.69 risk reward trade live on stream in front of over 60 people today. Step number 1, we're going to be using the 4-hour and the 15-minute time frame, not the daily. So we don't want to find our daily bias with the daily time frame. It doesn't tell us much. It just tells us if it's a bullish candle or a bearish candle. Sure, it can tell us where we're going to, but it doesn't give us context that we need for our session. All right, so we're not going to be using the daily time frame. We're going to be using the 4-hour and the 15-minute time frame. Especially if you're a scalper, finding structure on a lower time frame like the 15-minute is going to give you much more narrative and context behind where the price actually go to, what draw on liquidity, where is price moving right now, than the daily. The daily is just a bullish or bearish or literally a doji candle. It just tells you nothing. Time-based liquidity. Using time-based liquidity is super important. See, price doesn't move anywhere. The market doesn't just open and then just move. See, it is based off time-based liquidity. London highs, London lows, Asia highs, Asia lows, and we're talking previous session highs, previous session lows, like time-based liquidity. So when we're trading our New York session from 9:30 a.m. Eastern Standard Time up until about 11 a.m. Eastern Standard Time, we want to focus priority on London highs and lows because that is the most previous session. Same thing if you're trading London, you want to be focusing on Asia highs and lows. Pre-market narrative. Having a bit of a pre-market narrative is going to be so much better. See, you don't want to just go, okay, price looks bearish or price looks bullish. Like, you want to see what gaps are getting respected, where price is likely to draw to, where is it closest to drawing to, and we'll break that all down later on. All right. Remaining neutral. So many people stick and marry a bias. It's called marrying a bias. They'll stick with longs and they'll see a perfect short opportunity, right? That is literally textbook in their setup, but because they've married the long bias, they don't take any setup on the day, and that's completely fine, right? You're following your bias, but your setup's there. You should be collecting data on your setup and applying these things in real time. Being able to remain neutral keeps you flexible, and versatile in these markets, especially with all the Trump and news going on, with all that tariff stuff. Supporting your bias with your strategy. Like I was saying before, remaining neutral allows step number 5 to actually apply itself. By supporting your bias with your strategy, seeing your strategy supports your bias. It works hand in hand. So let me show you and let me break down how I was able to use this entire playbook right here in order to catch over a 3.69 trade today. So if you guys want to become a profitable trader and learn how to trade and take these trades live with me every single day in the market, then all you need to do is hit the first link in the top of the description. I break down all my trades and give my trades out in real time so you guys can follow along and make money at the same time. So let's break down how I was able to obviously catch this setup live on stream. So let's do it. We're going to break it down step by step here. So first one's first, right? We're going to be looking at the 4-hour time frame. So what we want to look for on the 4-hour time frame specifically is we want to look for our highs and lows, like our obvious highs and lows. We're not looking for just prominent highs and lows in the market. We're mainly prioritizing, right, 4-hour wicks highs and lows, all right? And I'll show you why and show you the importance and just tell you why and the importance. So first things first, this is our current session. All right, coming into this session. Now, it does show a little bit of the upside of this candle because it is close to the obviously 9:30, right? Even though I'm in replay mode. But to sort of just show you in general what's going to happen today is we had these highs, all right? So I'm just going to draw a little ray all the way over here, all right? And we had this other 4-hour high right here, both swing highs. Now, these two right here, right, are relatively close together. Now, obviously, we had this one all the way over here, but these ones have a very significant purpose and why these 4-hour wicks, highs, and lows actually serve a purpose. So right here, you can see, look at the time and price. This is Thursday's London high. See, London high was never swept, right? It was never swept prior, and it's looking like it's going to get swept today, all right? Same with the previous session high from the previous day. On that day, Wednesday, all right? That previous session high and this London high had not been swept. Now, when I use London highs and lows, I do use them a lot from days that haven't been swept on them. So you can use this and utilize this time-based liquidity for your advantage. They're not just regular highs and lows, they're time-based liquidity. See, during London and even on the previous session, that New York session that day, that's where a majority of orders are getting placed. And if people are still holding swing positions, all right, that's going to be a lot of draw on liquidity, right? So you can see that we obviously did come up and take that level. So it does show a little bit here, but that's the first thing we want to do, right? 4 hours, mark up where price is likely to draw towards and where it's currently going in trend wise. So if I'm looking at any 4 hour position on the market, right, I want to look at where the trend is going and where it's likely to draw towards, right? So if I'm looking at, this day, right, I'd be marking out all these 4 hour lows and where it's likely to draw towards. Because again, when we're trading the specific session, 9:30 a.m. to 11 a.m. Eastern Standard Time, it's super important that you're just prioritizing these 4 hour wicks as draws on liquidity. Where is that 10 a.m. 4 hour candle likely going to move to? Right, that's what you want to have to worry about. That's why it serves an important purpose to mark 4 hour highs and lows. Where is it going to move to? Now, in terms of going up, you can see that we're obviously respecting this 4 hour bullish fair value gap. We have one under here as well, an unmitigated gap as well. So that's something that we can target later on. But till then, we have to obviously inverse this to get here, which is not likely going to be the case. Now, moving on to the 15-minute time frame, right? Obviously, we can see it shows a little bit. The next thing we want to do is obviously, like I said, 15-minute time frame. We're not going to be using the daily. We don't need to use the daily. It doesn't show enough, right? We're going to be, okay, that's the 4 hour gap. Let's sort of apply our 15-minute highs and lows. So what we want to do in this scenario is we're going to use the 15-minute time frame and step number 3, pre-market narrative, to sort of find out, our best prices to put and obviously where price is likely going to go to with a bit of pre-market narrative. So the first thing that we're going to mark out with the 15-minute time frame is our time-based liquidity. That's the first thing we should always do. So we're going to leave those zones up here and we're just going to move everything back like this. All right, so what I like to do is I like to mark my Asia range from 7 p.m. to 2 a.m. And then I like to mark my London range from 2 a.m. to 8 a.m. All right, that's what I like to do personally. All right, it works very, very well. Okay, so you can see Asia low has been swept. Asia high has also been swept. All right, we can see that London actually is not swept because it's all the way up here. So it's right next to those highs all the way up there. And we do have London low down here. So I typically mark everything to about 11 a.m. All right, so that's going to be our time-based liquidity, right, for the day. That's our time-based liquidity on our day. That's what we're looking. What was happening, in the overnight session, the PM, and obviously the overnight session. All right. So coming into the day, we have a bit of structure on our actual day. Okay, we have some liquidity points that this current New York session can target or play off in order to get to higher time frame ranges from other times in month, like last month, February, and all those draws on liquidity that we're looking for up here. All right, so that's going to be super helpful to mark your time-based liquidity because it does help build structure. Now, obviously, time-based liquidity is going to give you a lot more narrative. It's going to go, okay, price has taken a majority of Asia highs and London highs, or majority of Asia lows and London lows, or you're going to have key points in the market that you're going to be able to target. Okay, so when we're trading New York, again, we want to focus on London highs and lows specifically, and then obviously apply Asia highs and lows as a bonus confluence, as a bonus target. Session liquidity is so much more important. All right. We're not just going to be targeting any random point. We're targeting those London traders, right? Specifically, we're taking their money, making money with their money. So, or by taking their money. So that's going to be super helpful. So we obviously got our London low down here. You can see our Asia range is basically taken, so we're not even going to focus on that. All right, and we have our London high up here. So now what we've got our time-based liquidity, let's get a bit of pre-market narrative. All right. So after we swept this low, this is what we want to do. All right, what's happening in this session? All right, so it looked like we swept this low, right? Swept this low right here, and then we're able to create a little uptrend and take out this high over here. Once we sort of done that, it leaves it a bit more obvious. Okay, see, what we also want to target with the 15-minute time frame is prominent and obvious highs and lows. So obviously prominent, obvious highs and lows are going to be your best friend. So when you're targeting prominent highs and lows, what is standing out to you? All right, what is clear as day to you in terms of highs and lows? Now, you don't want to just look at all these specifically, right? You obviously want to look at, what's 9:15 doing. You don't want to jump in the charts too late. 9:15 at absolute latest, so you can break these down. So what is this doing? So this looks like the lowest low and the highest high in this current trend, in this current leg from the 15-minute time frame. So these are going to be my nearest highs and lows for the prominent highs and lows, okay? That's what I want, obvious, right? I don't want to be marking out this. I don't want to be marking out like necessarily this. What is the most obvious points? That's going to be my focus, all right? So these are my focus. You can see both London high and London low are my focal points. So let's get a more narrative. As price was moving up, we created a bullish fair value gap right here. Now, if I know price wants to get to London low, we have to now invert that bullish gap to get there. Is that likely going to happen? Probably not. So that's something we're going to be cautious of, and you'll see later how I was able to be cautious of that in order to obviously secure this position. Right? I don't officially know if price is going to get there. It may get to this gap and bounce higher, and I don't want to be on the other side of that in profit and then immediately out of profit. All right, I want to make sure I'm securing profit. So we can obviously trade in the direction of these London lows and London highs. Obviously, most time-based liquidity is not going to get hit in your specific session a lot of the time. It's going to get hit in the day, right? About 85% of the time, but not in your session most of the time. Now, you can hold. You want to still look to hold to these levels, but again, you want to trade in direction of these levels, right? Now, at the moment, price is in a little uptrend. It's in a little uptrend. So I'm going to get rid of these lines right now. Right? It's in a little uptrend. You can currently see that we are respecting this bullish gap. So what is the most obvious anticipation? The most obvious anticipation is we respect this and go higher, right? Towards these draws and liquidity, right? That's the most obvious anticipation. And guess what, right? By remaining neutral, it's going to help, all right? We can obviously expect price to go lower, invert this, come to this gap and then play off it, or invert both and come to London low, or come up. See, remaining neutral is very, very good. If you just marry a bias like a long bias immediately, right? In some cases, it's going to help you. But if you had a perfect short position right here, right, off the liquidity sweep, you may not see that. This is a liquidity sweep, still a reason for price to reject. So when you remain neutral, okay, you find your bias and you support your bias by your higher time frame draws and liquidity, where price is likely to draw towards, but you find that by supporting the bias with your strategy. You find that with your strategy. Where is your strategy going towards, and where is it going towards in time-based liquidity with a little bit of pre-market narrative? All right, we know that price is likely to get to this level and probably not inverse it immediately and probably bounce off it, or we can bounce off this gap and come higher. So let's just see, with our pre-market narrative right here, we can see a little bit of uptrend, supportive gaps. Let's see what happens. We do have a little gap here that we're currently respecting, so we obviously have to keep note that we have to get through that. So in terms of trading, I usually just go on the 30-second time frame. 1 minute, you can do whatever you want. I find more opportunities on the 30-second time frame. So this is market open right here. It's basically market open. Still in that gap, and you can see that we swept this low prior. All right. Upon sweeping that low, we get a massive, massive displacement to the upside. Right. Now, my strategy with is either IFVG or fair value gap continuation. I trade IFVG different than most people. I trade it better, in my opinion, than everyone else in the industry. Same with fair value gap continuation as well. All right. This is kind of like my little play on what I like to use as well. So you can actually enter your position there. Why? Because we have good displacement. You can see that we're obviously displacing higher. And guess what? We have a London high and draws on liquidity to the upside. We've got a higher time frame narrative. We're delivering out of a 15-minute gap. So guess what? This current price action right here, right? That's my strategy, and it's supporting my bullish bias at this point. All right, bullish bias to respect that 15-minute gap. So I know I can jump in longs around about here if I want that. All right, and obviously target price all the way up, put my stop loss below low if I want to do that. In this case, I didn't do it because I usually like to see candle closures above previous candle highs. In this case, the next one was a little bit too far. Probably could have taken a push through, but that's okay. All right, I like closures. They're better. Price now sweeps both that first 6 a.m. high from the other day, that London high, and our current London high on the day right here. So in terms of, let me get my thing back. In terms of draws on liquidity, we have a reason to obviously go lower, but we're still bullish up until that last point. Still bullish, right? But guess what? Remaining neutral. We have to remain neutral. Now, this is where it gets tricky for some people. They see a big push like this, right? Let me just play the next candle out. 5 minute, they create a gap. They think, okay, perfect. I'm going to long off this to get to this high or higher in general. All right, yesterday we pumped up. I'm going to continue that trend today. This is where it traps a lot of people, and remaining neutral, right, and supporting that bias with your strategy is going to be the key factor in your success in trading, right? Especially with finding daily bias. So we had a 5 minute gap, right? We had a 3 minute gap right here. All right, what else do we have? We had a 2 minute gap. We had multiple 2 minute gaps. We had multiple 1 minute gaps. This is where it gets tricky. The people are like, okay, this is really, really bullish. We shouldn't be, creating some sort of inversion or reversal here, right? That's not the idea. See, on the 30-second time frame, right, you can see that we actually are ready to invert this. So if I play the next candle out, you can see that we invert this bullish gap. Right there, yes, we're in higher time frames, analysis. We got high time frame fair value gaps, holding price. What is the 30-second telling us? Well, the 1 minute actually closed on this as well. Okay, the 1 minute closed on this. Now, in terms of prominent highs and lows, you can use an indicator that I like to use as well. All right, you don't have to use it as often once you sort of get the idea. I don't really use it that often, but I like it here for my students when I'm live on stream. All right, when I'm teaching them, pivot highs and lows. Okay, indicators, pivot points, highs and lows. It's a free indicator, it's easy, and it shows you the most prominent highs and lows on any time frame that you're on. All right, right here, what's standing out to us? This obvious low right here. So I'm going to mark that, and that's going to be my sell side liquidity that I'm going to target. So now kind of look at the narrative of price right here. This looks like a really, really good reversal point off this IFEG, and it absolutely is. This is a really, really good inverse fair value gap. Now, I didn't take it on that. Why? Because I used the IFEG as an indication of price going into my favor to sell side liquidity. So I wanted to look for more confluences like any equal lows or any equal highs, and I saw these equal lows right here as well, just above the little gap. So these actually became my target primarily right here, all right, because I liked the strength of these equal lows. All right, I liked it. So in terms of this, I know price is not going to get to that London low because it has to get through that 50-minute gap. So I'm going to look for those equal lows as my lowest point, but I'm just going to manage my position. So yes, I used the IFEG here as a little indication. All right, you can see that price obviously created a double gap pair right here. Now, once price sort of come up into this area, right, you can see that price is actually it's in the 5 minute, it's delivering off the 1 minute, delivering off the 2 minute, and delivering off the 3 minute. So everyone's probably thinking longs. Well, on the 1 minute time frame right here, you can see that we didn't even pretty much inverse this. We had to inverse it with speed, pretty much one candle, right? We didn't. And then we failed again, right? We failed again. And basically when I saw that, I was like, okay, price is respecting the IFEG. It's not inverting these gaps. And once we, like I said, get that candle closure after respecting a fair value gap before previous candle low, we can take our entry right there. Now, I didn't actually personally take it right there specifically on the closure. I waited for price to obviously push through previous low. All right, stop loss was above at 20 points, which is something that I usually like to risk. And now guess what? My bias is supporting my bearish reasonings to go lower to that unmitigated gap or towards London low after taking London high, right? So I've stopped being bullish because we've taken that draw on liquidity and I've seen a reversal pattern with my strategy. My strategy indicates where I want to go. Well, maybe that's just me for my strategy personally, is I'm able to see, the direction I have a daily bias. Maybe for you and your strategy, if you're trading something different, it might be still a little confusing. But with my strategy with IFEG and fair value continuation, it's pretty much blatantly obvious every single day where price wants to go to. That's kind of the advantage of why I trade my thing. So once we get that push through that little area, all right, I'm in that position and I'm targeting these down here for 72.5 points. You can target that unmitigated gap if you want to. Right, we have some internal draws on liquidity right here, which is where I actually manage my position. So I trimmed a little off the top there. We hit this low, I actually trimmed a little bit more off there, and final take profit was hit right there for over a 3.63 risk to reward trade. Caught this live on stream again in front of over 60 people, maybe even 70 people to be honest with you. If you got any value from this video, you enjoyed this video, subscribe for more education and like the video. It lets me know I'm doing a good job and I can post more content and education. Again, thank you for 4K subscribers. We're blowing up right now in like 13 videos. That's pretty crazy. I'm pretty much gunning for 10K by the end of June. So let's try and make that happen. Let's try and get as much subscribers as possible. I keep posting more education for you guys and get you better as a trader.